Good morning, everybody, and welcome to this Siler Wealth Management video blog. Today is March 29th. It is Tuesday morning, and we're going to talk about what's been going on in the markets, which really has been just treading water. We've been going sideways, and there's a few reasons. Look, we've come a long way in the month of March after a really horrible start to the year. We got back to actually positive territory last week for a nanosecond, and then fell below the Mendoza line. So, that being said, you have to digest some of this upward move. We came up over 1,000 points on the Dow, 7, 8, 9% on these major averages. It's got to give some of that back. I think the market's due for a little bit of a pullback here. It's really struggling. Volume is very light. Yes, we had a holiday shortened week last week, and yes, the traders came back barely yesterday. But the bottom line is you have a holiday shortened, just the holiday hangover still. I'm not going to say shortened, but holiday hangover. April's supposed to be a pretty good month in the markets, and I think we'll be okay. I don't see a big sell-off going on, but here's a couple of problems we have. A, the dollar's getting stronger again. That is really bad for the multinational companies because they really lose. In most earnings reports that we saw in the last few quarters, about 7 to 8% of the companies like the Mercks, the Johnson & Johnsons, the General Electrics, the multinationals that do a lot of business overseas, 7 or 8% they lost in that currency translation. So as our dollar gets stronger, it really hurts their power to sell overseas. Okay? That's a problem if it continues. We're hoping the dollar can maybe settle back to where it was, but we are seeing the dollar rally. That's number one. The commodities are starting to get a little bit weak now. We saw a rally in oil, we saw a rally in gold, we saw a rally in natural gas. I still think they're really good plays. I don't see a lot of downside there. However, that may hurt some of the stocks in those industries. So we got to be cognizant of that and watch it closely. High yield bonds, which I am a fan of high yield bonds on pullbacks. I'm hoping we see that. They are starting to pull back. That's great. And I think that there's a good opportunity there with high yield bonds. One of the problems we had seen over the last year with high yield bonds is that the market thought there would be a lot more bankruptcies in the oil industry, in the oil and gas industry, than there has been thus far. So, the pendulum swings that way. So we don't want to own high yield bonds. Too many oil and gas companies going out of business. They're not. If oil can restore, and I hear a lot of targets at $50, $60 by the end of the year, they should be okay. Utility stocks starting to rally again. That's a sign that a weaker general market could be coming. Again, utility stocks are a safety net. So if money's flowing there, maybe the smart money's saying things are starting to roll over. And again, as I mentioned, low trading volumes. The other issue we're finding is that about a month ago, at the next Fed meeting in April, an interest rate hike wasn't really on the table. It wasn't really on the table till the June meeting. Now, since then, there's been about 4, maybe 5 Fed governors coming out and saying, we should be raising interest rates. Here's what happens. These guys, yes, they're brilliant people, but they're way too data dependent. They need to go out on the streets and find out really what's going on in the world. But the bottom line is, let's talk about what happened the first few months. The market was horrible. Bottom line is, as the market goes, the economy is going to go. So when people were losing thousands of dollars in their 401ks and their IRAs and their personal accounts, they don't feel as rich as they were. So what happens? Well, they start holding back, that big purchase. You know what? I was going to buy this new car, but wow, my 401k just dropped $20,000. That was the part of my new car payment, part of the price of the new car. The market since then has rallied. Now all of a sudden, let's go. Let's raise rates. 2 rate hikes certainly are in the cards. There's about a 15 to 20% chance the Fed will raise rates in April. Low odds, but still is that chance, and Wall Street sees it. Bottom line is, we're going to look at what the jobs report comes out on Friday. It's, remember, the first Friday of the month. Non-farm payrolls expecting 213,000 jobs. That's been going pretty well. So at this point, I think that you need to be in defensive mode. Wealth is not built just in real estate, just in the stock market. Wealth is built by looking at alternative assets as well. There are other things out there that you can take a look at. Yes, and real estate has been a great investment. The market has been one of the best investments in the history of investments. But there are other things you look at. And there are, for example, managed futures. There are currencies out there. There's private equity. And that's kind of what we try to add in portfolios using sector funds or ETFs and things like that. So here's a way to look at it. Right now, if you're going to go out and buy something in the market, I would be very, very cautious. I'd put it on a tight leash. Put something in, check out the volatility of the investment you're going to put or buy, and then put some kind of protective mode underneath it. Put a stop, or at least watch it and say, you know what, I'm going to tolerate 10% loss. After that, I got to get out, because we don't know what's going to happen. I don't see that we are in bear market mode once again, as everybody thought. I think we're going to pull back a little bit, but let your investments dictate them to you. Don't sit there and start wholesaling things. Go in and say, hey, this has dropped 8, 10, 12%. I'm out. Let's move on to the next one. This one's doing okay. Let's hold it. Let your investments dictate to you. This is part of portfolio management. This is part of risk assessment and risk management. Most people don't want to lose, or nobody wants to lose. But what we hear in our office, folks come in and say, you know what, I want to make as much money as I can and take as little risk. That doesn't happen. It just doesn't happen. If you have a longer term range, you can be more aggressive. If you have a really, really short term range, you have to be more conservative. That's what we talk about in our events. That being said, we are going to have another one of our events come up in a few weeks. I haven't decided which one it is yet, so hopefully by Thursday I will. I'm in no hurry for that. Okay. The market indicating a lower opening today. We're looking at about 40, 50 points in the Dow to the downside. Don't worry. Be happy. I think we're going to be okay. I think again, look for the pullback here. I'm going to look for pullbacks in energy. I'm going to look for pullbacks in healthcare and financials, although financials will start to get frisky as more interest rate hikes start to be more in the forefront of conversations. All right, folks, thanks for joining me. What I want you to do, share this video with your friends, and I will enter you for the drawing like I do every week to get a cruise for 2 to the Bahamas. It's a 2-night, 2-person cruise to the Bahamas. It's free. All you have to pay is port tax, okay? So share it, like our videos here, and then I'll enter you for once. You get 2 entries to share the video, 1 entry if you like it. I'm Lee Seiler, Seiler Wealth Management. Remember, you're coming to April 18th this year, tax time. If you need to fund an IRA, please do not call me on April 18th to say you need to fund an IRA. It's not going to happen. All right, we'll do our best, but it's likely not going to happen. Get to me before April 18th. In fact, why don't you get to me before April 15th? You get an extra few days. Let's take care of that for you. If you're 50 years and over, you can put $6,500 in your IRA. Again, it's based on, you have to qualify, make sure that your income levels, and we can take care of that in the office. 50 and under 50, it's $5,500 you contribute to your traditional IRA. Anyway, thanks for joining me. I'm Lee Seiler, Seiler Wealth Management. You can reach us anytime, either private message, email, phone call. We are setting appointments, really only doing them on Tuesdays and Thursdays. That's all we're doing for new clients. So please feel free to do that. I will talk to you on Thursday. Have a great day.